In this video, you're going to learn how to calculate basic taxes and you're going to learn a simplified tax equation. So before we get into the specifics of taxes, first you need to know the difference between gross pay, which is your initial pay. So that's what you get paid just before any taxes are taken out. Then you have deductions, which on a paycheck it's called deductions, but that is really the taxes that are taken out. And then after you take out your deductions, that gives you your net pay. And that's going to be your pay after the taxes have been deducted. So net pay is actually what matters. Net pay is going to be what actually goes into your bank. And that's what we're going to learn how to calculate today. So before we get into the equation, you got to know roughly these are the taxes that are taken out of your paycheck. Most people, the biggest expense is going to be federal income tax. And again, it's all based off how much you make. It's going to be usually anywhere between 10 and 20%. If you make, a really, really big amount, it will be more than that. But most people are going to be in between 10 and 20%. State income tax is going to be roughly 6 to 8%. Social Security tax for everybody is 6.2%. And then you're going to have roughly 2 to 4% for other taxes based on the state, county, other type of things. A lot of factors go into that other category, but roughly you can see that as about 2 to 4% in other smaller taxes. So now let's get into the actual simplified equation. So instead of trying to figure out the exact specific amount, I'm taxed 17.2% federal income and just adding all that up, use this simplified equation to give you an idea of what your net pay will be. And so the simplified equation uses the idea that most people have around 30% of their payment deducted for all taxes after you add up the federal, state, Social Security, and other taxes. So roughly 30% is the golden rule. So again, remember, if you add up all those taxes on that last chart, it is going to be somewhere around 30%. And again, this is an important part, give or take a few percent in one direction or the other. So the more money you make, it will trend a little bit higher than 30%, and the less money you make, it will trend a little bit lower than 30%. But again, the key is to understand that 30%, most people are going to have roughly 30% taken out. So the simplified equation, the goal of the simplified equation is to give us a good idea of how much money we will make per month after the taxes are deducted. So again, a good way to summarize that is that this will calculate your estimated net pay. Not exact, but estimated. So let's go into the actual equation. So it's just 2 steps. So what you're going to first do is divide your yearly income by 12 because there are 12 months in a year, so that gets it into a per month basis. And then once you have divided it by 12, the second step is you're just going to multiply that number by 0.7. And 0.7 represents that you keep 70% of the paycheck because, again, you are subtracting 30%, which are deducted for taxes. And so when it comes to the money that you actually see and the money that actually goes into your bank, it's only 70% of the paycheck. So that's what the 0.7 number represents. So if you do this simplified equation, that is going to be roughly how much money you will make per month after all taxes are deducted. So let's take a look at a real world example here. And what we're going to do is we're going to calculate someone's approximate monthly income using this equation. And then we're going to find roughly how much money do they make after all the taxes are deducted. So let's look at Carla here. Carla works as a marketing associate at Robert Half Talent Solutions. She's paid a salary of $63,000 per year. Roughly how much money does she make per month after taxes are deducted? So let's get into that equation now. So first, we're going to divide her yearly income by 12 to represent the 12 months of the year. And that's going to give us our money made per month before taxes are taken out. And then we're going to multiply that number by 0.7 to reflect the 30% of taxes that are taken out. And that is going to give us our answer. So let's actually perform this calculation. So first, we're going to divide her yearly income by 12. So you see she's paid a salary of $63,000 per year. So we're just going to take $63,000 divided by 12. And then that's going to give us $5,250. and that's the money she makes per month before the taxes are deducted. And then we're going to take that number, 5,250, and we're going to multiply that by 0.7. So take that number, multiply it by 0.7, and that's going to give us our answer. She makes roughly $3,675, again, roughly, after all taxes are deducted. So use this equation to get, again, notice in green, a good estimate of how much you'll make after taxes. Not going to be exact, but it will give you a good estimate of how much you'll make after taxes are deducted.